Hello everyone, this is Munib Ahmed and this is the second part of my cost accounting presentation. In this video, we'll be covering about absorption costing. First of all, we need to define what is absorption costing. Absorption costing is also known as full costing. Absorption costing is a method of cost accounting where all manufacturing costs are allocated to products whether they may be variable or fixed. This method ensures all the production costs are included, which include direct material, direct labor, both fixed and variable manufacturing overheads are absorbed into the cost of the product. It this method is generally accepted by all the accounting principles and is used for financial reporting. Absorption costing is provides a comprehensive view of the product costs and is especially useful in valuing the inventory and determining the cost of good. Well, the purpose of absorption costing. Absorption costing is to provide a complete view of production costs and aid in pricing and financial reporting. Now we'll talk about the key components of absorption costing. Well, absorption costing includes all the costs, absorbs direct, indirect manufacturing costs into the cost of production and but the non-manufacturing costs such as selling administrative expenses are not included in the product costs. Then comes fixed cost allocations. Fixed overhead is distributed to each unit produced. It is a predetermined rate that is distributed among the units. Then comes profit impacts in inventory level. In a higher inventory level can defer fixed costs to the future periods, inflating profits in the current period. Well, then comes legal requirement. Absorption costing fulfills the compliance is in compliance with the accounting standards for representing financial statements. Now talking about the benefits of absorption costing. Absorption costing provides a holistic cost representation, which means it provides a comprehensive representation of the cost by including both fixed and the variable costs, which provides a complete picture of the production costs and uh, is useful for pricing and the profitability analysis of the products. Then comes inventory valuation. Absorption costing provides values the inventory accurately by including the fixed costs, which is beneficial for financial reporting and decision making. Then comes profitability over the long run. Uh, uh, Pricing decisions. Absorption cost ensures the price products are priced correctly and covers all the costs, including the overheads. This reduces the risk of underpricing and going into losses. Then also it helps with profitability over the long run because as the mm, uh, product is evaluated correctly, the costs are uh, low, which provides profitability, and as fixed costs are taken into consideration, it gives profitable return after in the long run. It also encourages full high efficiency of utilization of the resources, ensures all costs are covered within the production and covered in the pricing and reducing the risk of underpricing the goods, highlights and the impacts underutilized the capacities of the fixed cost per unit. Well, now talking about the limitations of absorption costing, that may include cost distortion. Uh, as fixed costs are taken into consideration, the fixed costs are spread among the units that are produced. So changes in production volume can distort the per unit costs and potentially leading to poor decision making. And then comes the risk for overproduction. Uh, Managers may overproduce to allocate the fixed costs across more units, improving the profitability, but on the paper. But then it ends up leading excess in the inventory. Then it is unsuitable for the short-term decisions, as fixed costs are taken into consideration. Absorption costing may give less profitability in the short term, and which makes it suitable for the long run but not for the short term. Then comes complexity. Allocating fixed overheads to the products and can be complicated, requires judgment, which may introduce subjectivity. Then comes impact on decision making. The management can misled because by thinking that product is being very profitable, but on the other hand, the product may, by very difficult means, is covering its overheads. Well, then now we talk about the applications of absorption costing in business. First of all, pricing strategies. Uh, it Absorption cost helps set prices, ensuring that all production costs are included, reducing the risk of underpricing and keeping the company profitable, and keeping the ensuring that the product is being profitable. Then comes financial reporting. Absorption costing is in compliance with the financial reporting, as it covers all the costs and the overheads. That's why it is better for financial reporting. Then comes cost control. Uh, co- uh, Absorption costing helps identify the costs and includes all the costs, and helps in recognizing the cost and also reducing the cost. Then comes capacity planning. It helps in evaluating the production capacity usage on and impacts its unit costs. Then come decision making in capital intensive industries. It is critical for businesses with significant fixed cost because it to understand the impact of production on the unit economics. As the costs of one unit are fixed, when there are significant fixed costs, absorption costing helps increase the company's profitability. Now, talking about the impacts of absorption costing on the financial statements. First of all comes income statement. Well, in absorption costing, a portion of fixed manufacturing is included in the inventory costs. This means that when the level increase, level increases, some of the fixed overhead costs are deferred in the future periods, resulting in higher profits. Conversely, when the inventory level decreases, fixed costs are expensed, and reduces the profits. Then comes balance sheet. Inventory valuation includes a portion of fixed manufacturing overheads. Overproduction can inflate the inventory, and increasing the production may improve the profits of the company. Then comes tax reporting. Absorption cost is often reduces the taxable income periods of rising inventory levels. Well, now we'll look at some real world examples. First of all, in manufacturing, it is widely used to determine the full cost of productions like cars, electronics, and consumer goods. Well, a case study, a furniture manufacturer uses absorption costing to allocate fixed costs such as factory rent across all units. Inside that, it helps keeping the prices competitive, ensuring all the costs are covered, reveals areas of cost control where and reduces the production expenses. Well, now we'll compare absorption costing with standard costing. Well, the purpose of absorption costing is to provide a full representation of inventory valuation and the pricing. On the other hand, standard costing provides cost control and various analysis. Then comes the focus. Uh, cost Absorption cost focuses on allocating all the costs to the products. On the other hand, standard costing emphasizes efficiency on the comparing actual versus the standard costs. And then flexibility in decision making. In absorption costing, there is less flexibility in the short term decisions. While on the other hand, standard costing provides a highly flexible decision making in the short term and the long term. Well, talking about the profits, in profits, the standard costing, the profits are influenced by production volume and the inventory levels. Well, on the other hand, uh, in standard costing, profits are not directly involved or any linked with the production levels or the inventory